optimism for a robust primary market in 2024 to increase investors' confidence in recent leadership appointments in the energy sector. What are the key drivers for the performance? I'm being joined by Managing Director, Chief Executive Officer, Optimus by Afri Invest, Mr. Ayodeji Ebo. Thank you so much. It's good to have you on the program this afternoon.
Good afternoon. Thanks for having me. Happy New Year.
Yes. Well, I'll talk about Nigeria's market. But before we start with Nigeria, I want to ask you what your view is talking about the global market indices so far in the new year.
Okay, thanks. So we will see that the global market, looking at starting from the US market, has been volatile on the back of the major data, the inflation rates, employment data, and that has really also affected the investors' sentiment. So, but we feel that with the expectation this year that there would be less rate hikes, which means that will be positive for the stock market. So it's still early days. Today is 19th, and we think that there's a lot of prospect. Given that last year we saw the occurrence of the central banks, which led to more attractive rates within the fixed income space, which has a negative correlation with the markets.
Well, that's a good way to start. But globally, you see that gold prices have largely dipped in the United States and Asian markets, causing fears that edging of funds and investors could stay weak. But my question really will be, what options are there for market players?
Okay, thanks. If you look at the global space in terms of alternative assets, you would also see the significant movement we've seen within the cryptocurrency market. Yes, it's there's this trader, but that has also improved significantly. Yeah, commodities are still shaky given several tensions, political tensions all around. And in terms of asset classes, look at the fixed income space. There's also potential for upside because most of you look at the UST and the UKT, see that significant discount, which provides upside. What most investors are waiting for is direction to see how aggressive will the central bank bring down rate, not that it would have has direct opposite impact on asset prices. You also want to look at housing space. Bringing down rates is also positive for the housing. So early bed positioning has also started within the housing sector because once the rates also become more affordable, demand would increase, and as a result, price of houses would also improve.
Well, let's talk about exchange trends and derivatives, which seems more in big markets. Can African markets, benchmarks, or ETFs derivatives advantage?
Yes, I think there are a lot of advantages in ETFs. And like I always say, is that if you don't have the time to track a particular sector, track stocks individually, you want to go for ETFs, even from the global space. So looking at the African market, last year for some African markets, the Egypt market, most of them did not perform positively, but we're expecting that there will be more upside this year. So if there's like an African market, that means stocks that are covering the different select stocks across the market, across African markets, I think would be positive. Now would be carrying the day within that space, given what is happening with the grand market. The market touched about 94,000 points today. So that would have also improved it. So we need to have more ETFs in the market, tracking sectors, tracking the African market, or even tracking the Nigerian market. We'll have like ETF and Nigerian exchange that covers, let's say, the top 60 stocks. We need to have more in the market.
in our market is something that runs through my mind. I just spoke earlier in my first segment, investment drive into Africa's most populous nation. What do you make 24 and more investments in the markets? Looking FDIs, FPIs. Some say we should just wait for FPIs at the moment. Then later we do FDIs. What do you make of all of this?
Okay, thanks. And if we're speaking, currently this market is not even waiting for the FDIs. So the market have moved by over 20,000 points. Yeah. The open this year been very aggressive because most of the weather stocks are now moving the market or moving the indices. So I think participation of retail investors is commendable there. Currently, it's both the domestic and institutional domestic investors that are driving this market. And one advantage that presents is liquidity. Yes, because when you look at in the past, when there are crises globally, when the foreign investors are pulling out significantly, you saw that you would use major decline. But what we would see is as we have more people come into our market, because when you look at the number of those that are even investing on the Nigerian Stock Exchange, there are less than 500,000 active players within the stock market. So having new people join, yes, will increase prices, but also create stability. Why would not want to? Well, we now want to focus on, let's say, the FP which you have raised out, the FDIs. Our focus will now be more of this policy. What would bring stability in the FX policy? Yes, the new CBN management, they have been clearing backlogs. They have been trying to provide confidence. But most of the investors will need to even first take out the money that has been trapped within the last years, 3 years. Yes, at a lower value to them in terms of the value that they may get for it. But they will need to first escape from the country before they now do the analysis. So what I would say first to attract FPI is there needs to be that consistency in our body language as with the steady supply that we're giving, saying that backlogs no longer accumulating. Then that consistency for like 6 months or a year. Then we may need to see new entrants or FPIs into the Nigerian market, and it's really going to be positive for our stock market because if retail investors the domestic investors and these funds that we're seeing in this market, the addition of investors to this activity will see prices improve significantly or goes up significantly than these levels.
Well, let's take it a step further. We know that report funds is something that investors always talk about. It's always on the front burner. And today we have news that CBN says repatriated $795.4 billion in 6 months. Now, what do you make of this? The CBN gradually, verified claims are being sorted. Do you think that that's the step to go, or that's the right way to this time? You know that in the other markets that today, a dollar is changing naira at about 1,300 naira. This is worrisome.
It's concerning that based on the current rates in unofficial market. Well, I totally align with the policy of current situation of trying to clear backlogs. So it's like you have been owing someone money and you have not been paying back for a long, and now you started paying back. Perception-wise, it would give you a positive outlook. So with what we are seeing and the updates they have provided, because sometimes they say when they're silent, people begin to have different version of the story or different increased speculation. So those updates are required. They may not look nice that you just sorted out $10 million, or let's say you sorted out just $1 million out of $1 billion. Yes, it may look so small, but when people begin to see it, there's consistency. Next week, if you have more inflows, you have $50 million, $100 million, we'll begin to see confidence and there will be less speculation. And once there's less speculation, we begin to see gap between the unofficial market and the official market close up. Yes, with the what is finding practice in the official market, and that's why when you look at intraday, for investors, it's not just to look at the closing price, what the intraday and what's the volume. You can sometimes almost trade almost as close to what we are getting in the unofficial market. So that as people are able to sell at a price that is close to what is at the unofficial market, it reduces round tripping and will increase the inflow that we'll be seeing in the official market because investors will be getting value for every dollar that they're paying.
Again, now we see a long bullish run in the market. You've talked about that, though. People are already seem agitated about the soaring price. What is your view around this?
Okay, thanks. For those that have been in the market for long, we may be getting worried and concerned that I hope this is not a bubble. And but there's also the view that you look at what are the major reasons of the increase that or the rally we're seeing in the market. Apart from fundamentals, they are correct that we're also seeing fear of missing out. So that bandwagon effect, or because you've heard that the stock has gained 100%, you also want to come and join the bandwagon. But these are new inflows that were coming into the market. Compared to what we saw in 2007, 2008, where we had a lot of placements on net put deals that really impacted the market. The situation is a bit different. Regulations is a bit strict. Investors are buying stocks. Yes, some of them do fundamentals, but over time, because we are also seeing that demand coming in almost at the same time with the hope of also being gained. I think, yes, even if there's going to be, I'll call it a correction, not the bubble busting, call it a market correction. What we saw this week is providing a bit of comfort that you see the banking stock almost at that same level. So it's not that most of them are just on the rise. Most of the stocks that we still see that sustain that momentum are stocks that based on the information available, Dangote Cement, that people are buying the information around those stocks. So I think that while there's we look at the view of those or position of those that are concerned market, yes, it may look germane. There's also another school of thought view that we can say what we are seeing more people to the market. So I can tell you because we speak with investors daily, number of new accounts that are being opened on a daily basis. And if we can be able to sustain this moment, apart from adding value to the net worth of Nigerians, they cultivate that habit of investment. But one thing we also need to note is that people should also understand what they're putting in their hands. Stocks are for long term. If you are coming into stocks with the mindset of to come in within 1 month to go out, yes, you may be lucky, you may get that return that you're expecting, but it is a gap. Once we are looking at a very short period to stocks are for long-term investors, patient investors, and if you are patient, if you do your calculation well, return can also be very interesting. While I wrap up on that, it's also good to know that if you know you don't have the time to be selected, go from equity mutual fund or equity ETFs. They track the same thing. You would also enjoy that benefit. And they are managed professionals, portfolio managers, so that if there's going to be a market correction, they may quickly know where to continue to rotate to, which sector to rotate. Get to you if you don't have that information, because it's good to have that sense of caution. But what happens is when there's a major market correction, But newbies in the market are those that have carried that negative sentiment about the market because they don't have that proper understanding. They've never lost money in this market or seen their go down. So it's good to understand how this asset class, stock or shares, works.
Before I let you go now, intra-African listings are poor across African stock exchanges. How do we improve on it, of course, to create wealth?
I think there are initiatives that are currently being done around that. I think earlier last year, some months towards the end of last year, led by African collaboration with Nigerian exchange, there's this second start where our customers can trade across African countries. You can currently trade the Ghanaian market and as well as the Kenyan market. I believe that with that in place, as we build on that, we will begin to see listings. If they will see that there are opportunities for to be able to trade in those markets, then they will also raise funding across those markets. So we just need the regulators with the market players to intensify efforts to see that so that we harness benefits that are within the African community.
Interesting stuff there. Mr. Ayodiji, finally, your thoughts. There are other economic issues, of course, affecting the market in Nigeria here, the larger economy. Do you think this will impact moving forward?
Okay, thanks. The market cannot operate independent of what is happening in the economy. Yes, we're enjoying the market now, but if you also look at the companies that are operating, that are listed on the stock exchange, they operate in the Nigerian economy. If the business is tough, if the cost of business is very high, it reduces their margin, and as it reduces their ability to pay dividend as expected. So it has that direct impact. Insecurity is also a job factor that has direct impact. Inflation. So there are a lot of factors that will have that impact. So policymakers should also be mindful of that perception. You know, the last time there was a raid on Dangote Cement, Dangote had about 3-4 stocks. Yes, there's a way you go about things so that when you look at the implication, people can lose, those stocks can lose 10% or 20%, people losing their money just because they are of the way things are. Once we begin to have that at the back of our mind, that whatever action, all these things are intertwined, and if we're able to work on that when we are formulating policies, when we are making statements from the fiscal authority, monetary authorities, and we know what impact it can have, there may be better ways for us to push those policies where we achieve that same objective that we have in mind.
Interesting conversation with you as usual. I must thank you for your time. I've been speaking to the Managing Director and Chief Business Officer with Optimus by Harvest, Mr. Ayodiji. Thank you so much, and have a great weekend. A profitable time.
You. Yeah.
All right.